Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today we will take a look at the Canadian dollar. We haven't discussed the Canadian dollar for a considerable period already, and the time has come to take a look at this currency. Also because the market has formed really perfect pattern on the weekly chart. But another reason why we have chosen the Canadian dollar, because although this pattern looks really perfect, but the situation around it is not really simple as it could seem on the first glance. We suggest you to read our weekly research, because on the monthly discussion of the monthly chart, it's really a lot of comments that point on the risk of failure of this pattern, and this situation really could appear. I mean, the failure of this pattern. Because monthly chart right now clearly shows the reasons why market really could continue to move higher. The same reasons we also see on daily chart, and the situation around this pattern is really very complex right now. It happens really rare when the clear pattern, and in fact almost perfect pattern, meets with such sort of concern around it. Because if you take a look at the weekly chart of the Canadian dollar, you'll see that market shows really perfect thrust up, close below the 3x3, close above and creating the new top, swashing rings of this first, close below. And that is the confirmation candle of the double repo sell on the weekly Canadian dollar. The target of this pattern, the minimum target, is 117.30 area, the 50% support of the whole thrust of the double repo. Also guys, if you'll take a look on the monthly chart, you'll see the market here stands at monthly overbought and the 50% major resistance. And we could ask whether this pattern has the chance to be successful. And answer probably yes, because market has formed the bearish stretch pattern on the monthly chart. And the double repo pattern, and this from that point of view, the double repo on the weekly looks very suitable. And this is the pattern that could trigger the retracement as a respect of the combination of the fib level and monthly overbought. At the same time, it's not as simple as it seems on the first glance, because after this pattern has been formed, we do not see any thrusting acceleration. We see just a flat action here. You could say that has happened due to the reaching of the weekly oversold and monthly pivot support, and market has bounced up. And you could say yes, the 3x3, take a look, holds action very good, so market stands below the 3x3. That's happens very often when the market confirms the double repo and stands for some time, some periods tight, and action starts a bit later. That really could happen, and this is normal. But if we'll take a look at the daily time frame chart, guys, you will see what I'm talking about. So on the daily chart, the first glance, we also see the bearish setup. So we have this bearish divergence with the MACD. We have this stop grabber here that could really trigger the downward action taken out of these lows. But guys, here we see the signs not of the bearish divergence, but of the bullish dynamic pressure. Because take a look at price action, the trend mostly has shifted bearish, but that price action continues to form high lows. And that really could be a sign of the possible upward breakout and failure of the double repo pattern. That really could happen. The major concern right now is that current action could be treated as the bearish and as the bullish. And depending on how the situation will be resolved, we will get either the double repo pattern or the double repo failure. That's a bit difficult to imagine, especially when you have the clear and perfect pattern on the weekly chart. And psychologically, you has the tension to trade it as soon as possible, because market already has formed the pattern. We need to take the position. We need to step in the market and join this party as soon as possible. But in the current situation, it's not really simple, because on the daily chart we see the bullish dynamic pressure, but on the monthly chart we see untouched target and the action that points on the possible upward continuation. If you will read our weekly research, you'll understand what I'm talking about. And in such circumstances, we need to be extra careful and think twice where to take the position and how to take it. So if we will go through this setup step by step, what we have? We have the confirmed double repo pattern in place on the weekly chart that could bring us even two patterns. The first one is the direct double repo. The second one is the failure, double repo failure. Now it could appear because double repo already has been confirmed. And depending on market behavior, we need to find the crucial points, let's say invalidation points for both scenarios, and where we have to take position either long or short. So let's start from the direct double repo pattern. Theoretically, the first position could be taken right here, because here we have in place the bearish grabber that could give you some protection on your position, and in the market will turn to the downside, continue move lower, taking out of these lows. You need to place your stop to the break even. That's the position where you can take the short position. The second way where you have when you could take the short position and the breakout of this line and failure of our bullish dynamic pressure. So the market will show the clear sign that this bullish dynamic pressure has failed. In this case, you also could take the short position. In other words, this will probably happen when the double repo will show the downward continuation. So how to do this? It's your choice, because you could trade this double repo right on the weekly chart, but not everybody could allow to yourself to do this, because this really will be accompanied with the big swings and the big risks and the big losses, because this is weekly chart. The distances between the points are really significant. So you could do this only if you drop your trading volume significantly. That's why you could start to search the compromises on the intraday charts, on the daily chart, how to do this. And one way that could be taken here is right here. So you could use, for example, this grabber for taking the position, or wait the clear confirmation of the starting double repo is to breaking and erasing of the bullish dynamic pressure. Now about long position. Where to take the long position? If you would like to bet on the failure, the first way where you could do this is right here, because take a look at the weekly chart. That is weekly oversold and monthly put support 1. It means that if you will take long position as close to this area as possible, you will minimize your possible risk. And if market, for example, will hold here and bullish dynamic pressure will start to work and double repo will shift to the double repo failure, that will be the perfect area for taking the long position. And because that, first of all, will be the minimum. So, in fact, the starting point of the possible upward action. The second, your risk will be minimum because if market will break through this area, you will understand very fast and your loss will be relatively small. Conservative tactics for the trading on the long side of the market of this setup is wait for the double repo failure pattern. How it could be could appear if market will return right back up above the 3x3 and close somewhere around this top, around 128.30 area. In this case, that will be the double repo failure, and that will mean that market will continue move higher. The next target will stand on the monthly chart on the 618 resistance in approximately 134 area. That's really significant. So as you can see, the situation on the Canadian is not as simple. You will understand the situation better if you will read the weekly research. There are a bit more details, and there are also explanation from the perspective of the monthly chart. So it contains a lot of useful information for the trading of this pattern. And although you have the clear pattern, it's not really quite clear still right now how to trade it, because there is a lot of contradictory patterns right now and moments are forming on intraday charts. So those of you guys who would like to trade this pattern based on this stop grabber, you could take a look at the hourly chart. That's stop grabber swing. And probably you could try to take the position based on some retracement. So you can see that 3-8 retracement already has happened on Friday. It's 126. The stop should be placed somewhere above this top, because this is the validation point of this grabber. The target of this grabber will be right here. It's minimum target, so market should return it back down and taken out of these lows. But simultaneously, that could trigger the downward continuation on the double repo pattern. So if market will finally will continue move lower and right to these lows, you probably easily will get the answer how to manage your position. So move your stop to the break even and watch what will happen. Well, that's in fact all that we could say on the Canadian dollar. The major conclusion is situation is not as simple as it looks like on the weekly chart, and we should be extra careful with the trading this setup, because the situation on the crude oil market, this Canadian has the big relation to, is not really clear yet. Although you could find the nice double repo buy on the crude oil, but the action that market shows right now there is not very typical for double repo pattern, and that increases the chance of the failure of this pattern. The same is true for the Canadian. So try to take the position as closer to invalidation points as possible, despite what direction you will trade, bearish position you will take or bullish. Try to take the position with the reasonable risks and clear understanding where you place your stop, where you profit. And let's see, I think that soon this riddle around the double repo will be resolved, and despite the direction in what it will be resolved, that promises us really big action, either to the upside or to the downside.